What's up, guys? Japarico here. Today we're going to start lesson 15. In lesson 15, we are going to see how to. So far, we know how to set stop loss and take profit. But what values to put there? What values? Because, okay, so far we know how to do it automatically. So we don't have, even when we are sleeping or going out with friends, it will automatically trigger one of those. And then we'll either save our capital or we'll close the position with a profit. Okay, so either one will happen. But what values to put? Okay, which is the most important thing, I think. Knowing how to set those things is important, but the actual value to put there, the parameters to put there is even more important. So 2 videos ago, Camille has said she has opened a trade, hasn't been closed yet. So let's take a look at that first. Okay. So guys, so far we are losing 2.47% of her capital, which is $4.20. Okay.
I see it going back up.
Oh yeah, it's going back up. Yes, yes. Okay. So that's the update on Camille's trade. So let's leave it like that for now, and we go back here. Okay. So guys, so what I said was, so we identify a pattern. Okay. So it's always like that, always like that. So identify the structure, identify what pattern is being forming, identifying what kind of rules the price has been respecting so far. And then we do the enter according to those set of rules, okay? And then we set the stop loss and the take profit according to those rules, okay?
Yeah.
So first lesson, what is being going according to the moving averages that we learned so far according to the volume, what hasn't, okay? So first of all, let's get rid of all this that we don't need yet, okay? Okay, so let's plot, okay? First, let's go to the James O. Okay, so this one, I have many things being plotted, okay? So first question, Camille, do we need the 200 moving average?
No.
Good answer, good answer. Because guys, so far I don't see any pattern forming along this 200 moving average. Also because we are on the daily chart and Uber is a relatively new company on the stock market. I'm not sure if you guys remember, but Uber only went IPO on, okay, last year it was around May. So only went up IPO a little bit over a year ago, okay? And that's why the 200 line is so short, because we don't have enough data to plot the 200 MA, okay? That's why it started so late. So let's get rid of that, because it doesn't really work. And let's get rid of the 1000 MA, okay? Also because I've never explained about it, and secondly because it hasn't even showed up on the chart, okay? Because we don't have enough data to plot the 1000 MA. So okay, let's get rid of these two. Okay, so Camille, what can you see here? I can see many things. I think this is very useful. What do you think?
In general, or what?
Yeah, so let's see. Okay, first question. Do you think what we explained last lesson, that you wait until a cross up or cross down, and then you wait until a bounce back, and then you enter, and then see if it goes well or not, okay? So do you think that rule will work on this chart or will not work?
Well, the difference with this is it has a bigger time scale.
Correct.
This is like monthly.
Okay,
The other one is like within
no
minutes.
problem, no problem. We change to 30 minutes. What can you see here?
It went up and it went down, but it mostly.
Here, actually, I think it doesn't really work that well. I think on the daily was working better. Let's plot the 200 back on this one, right? Because we haven't seen, right?
Yep.
Let's put the 200 back. Okay.
I'm not sure. Well, right there it tells
Yeah,
it, but
right.
not sure about later on.
For example, right now it's more likely to continue to go up, right?
I think so.
It's more likely will continue to go up. If it respects this line, okay? If it goes along this line, the 200 MA.
Yeah.
Let's see. Yeah, okay. Would you follow that rule or not? Because if you follow that rule, right? So when would be the last time you would use that rule? Okay. Here, for example, when would be the last time you would use that rule?
There. It went up. When it meets again, it went up.
Okay, so you would use the rule with the 20 MA and the 200?
Yeah.
Oh, okay. So you would get rid of the blue one. You wouldn't use the 5.
Yeah. I think it makes more sense. It gives a fuller picture. A bigger picture.
So when would you buy?
Here.
Okay, because it crossed the further side. Okay,
Yeah.
I know what you see. So you're seeing it cross once, and then here you just assume this is a correction, right? And then here cross up again, right?
Yeah.
And then you would, second time. Okay, so you probably would get, hey, but then, if price was here, okay?
Yep.
And then probably you will get on the next one, so you probably would get this price. Okay. Yeah, but
in a
which
matter
is
of
fine.
second.
Yeah, which is but it's okay because we are on the 30-minute chart, so you probably get here, okay?
Okay, within 30 minutes.
Yeah, you probably get here, okay, and then probably you would close here, right? Because
Yeah.
it was when the candle actually closed at
Yeah.
lower than this price, okay? If you didn't close with a loss here, okay, which was actually when the candle went down again and crossed this line, okay? So if you didn't close with a stop loss here, you would have closed with a profit here, okay? So, okay. So do you want to set the, so that's why the setting the take profit and the stop loss is so important. Why? Because you don't want to set, for example, in this case, right? Let's say this case repeats, because then you have to compare this case with a lot of those on the left of the chart to see how many times actually repeats.
Yeah.
then to validate your strategy, okay? So your stop loss cannot be less than this,
Yeah.
right? Why? Because actually went all the way down to here, okay? So your stop loss has to be further than this, understand? So for example, oh, see, this price was 32.65, okay? Oh, if you bought at 32.65, okay? And here went all the way down to 31.54, okay? So your stop loss has to be more expensive than $1.11. Has to be more. Otherwise you'll hit and then, all right? So let's mark that down actually. So, so stop loss of Camille. Camille's stop loss have to be more than this, okay? More than this. How about your take profit? If you open here, okay, okay, the most you can get would be here, right? But I said let's be reasonable, okay, and let's wait until, because here we have no idea, we can never catch this because it doesn't really. What we could have done is actually see if it reaches the previous high, which is here, which actually did, right? Let's see. Yeah, guys, if you had followed. Oh yeah, it did. Yeah, yeah. So guys, that's what I said. That's why I always say don't consider the shadow. Okay, don't consider the shadow. So the previous high was here, guys. And actually, she could have gotten like the most of this trade if she set it to this level.
Yeah.
Okay? This is one way to set it, okay, to the previous high. Another way to set it that she wouldn't get as much would actually be what did I? Here, right? Yeah. Yeah. So if she open here, guys, the next would be when it crosses down again. So the candle crosses the moving average here. And then here she wouldn't make that much money, but she would still make a little bit more, okay?
Yeah.
And then this would have made you a profit of, see, from here to here, 1.46%, which is a profit of 48 cents. Yeah. So okay, what can you see by looking at this? Do you think it's good for you or not? Do you think this is good for you or not, this condition?
Well, I'm earning.
Okay, this condition is very bad for you.
Why?
Because if you keep repeating this condition, okay, every time you lose, you're going to lose $1.11, like $1.11. And every time you win, you're going to just win 48 cents.
Oh, okay.
Yeah.
So the stop loss has to be smaller than the take profit. Is that what you're saying?
Okay, let's say you have a win rate. Let's say your win rate, okay? Let's say your win rate is 50%, which is very normal, okay? Very normal. You will make more money or lose more money if you have a win rate of 50%. You are correct half of the time, and half of the time you are incorrect. By having these two conditions, in the long run, let's say 1 month, you keep doing this, you will have more money or less money?
Less money.
Yeah, less money, less money. Because when you lose a lot, and when you make money, you make not that much. Yeah, you make less than half of this, right? Yeah. So this, guys, is not good for us. Okay, this is not good for us. So we need to see when we make more money. Okay, when we are correct, and we lose less when we are incorrect. Okay, so far this is not very good. Okay, and then your question to me is to make this more than this.
Yep.
That's one way of seeing it,
Yeah.
but it's not the only way. Why? Okay, guys. So while Camille starts to think about the answer for that question, let's take a look at her trade. Okay, so we go back here,
I went back up, but
and then okay, let's just get
I'm
rid
gaining
of
money.
this. And then this.
Well, actually, I think I'm gonna close soon.
Okay, so guys, so far, so far, guys, Camille was losing money here, okay? And then we said, oh, once it cross up, okay, we wait until it goes back and then, right, do something according to the theory, right? But so far it hasn't. And then Camille now actually making money. She's making $3.49.
And then like right now I can see that this line, what was it, 20?
This is to 20 MA.
20
Yes.
MA is gonna meet, it's probably gonna meet this 200 MA. So I'm gonna see if those two intersect.
Yes.
And then so that
And
is,
if they do, what you do?
then I'm gonna continue waiting.
Oh, okay.
It might be going up.
Yeah.
Gonna wait a little bit.
Okay.
Mm.
Cool. So Camille is doing the right decision so far. Well, apparently, so far, yes, she's making the right decision. Let's see. Okay, and I also explained about time frames. Remember that I say when you see something here, you want to see in a bigger picture, always go up. So on the 5-minute chart, this is what is happening. This is the 5-minute chart. On the 15-minute chart, this is what is happening.
Mm.
So on the 15-minute chart, actually is trying to get to the, actually is trying to get to this line, okay?
Yeah.
Okay, guys, so that was the video for today, and we'll see you guys in our next video. Bye, bye.